The most frequently asked question I've been getting over the past several months is, have we reached the bottom? If not, when will we see the market's bottom? Are we close? Or is this just the beginning of a multi-year nuclear bear winter? Hello, I'm Crypto Casey, and in this video we are going to explore my random, wild guess at when we will finally reach the bottom of this bear cycle and finally turn bullish again. Be sure to check out our sponsors Ledger, Proton, and Masterworks. Get your crypto off of exchanges and onto cold storage hardware wallets from Ledger. Protect your core account privacy with Proton's Swiss-based encrypted email file storage and calendar. And more on Masterworks in a bit. Awesome, let's hit my wild random guess at the crypto market bottom. March 25th, 2023. That's when we bottom. That's my random wild guess. And besides for one of the reasons, simply being that it's the GOAT's or Elton John's birthday, that he just so happens to graciously share with me, March 25th being my birthday as well, let's explore the other things I'm factoring into my wild random guess. As complex as this volatile market and garbage macro environment may seem, the ultimate outcome will likely be pretty straightforward. The Federal Reserve is hellbent on getting inflation back down to 2%, which won't happen anytime soon. The amount of time it would take to reach their current inflation target is extremely unreasonable. So although the Fed has been hawkish and gives us lip service about how they will remain hawkish until their inflation goals are reached, before inflation drops substantially to the Fed's liking, there will be a system failure that breaks something big. Sure, we are experiencing system failures and massive breakdowns in the crypto markets, but with a total market cap of about $855 billion right now, we are not only statistically insignificant, we are perceived as a threat to the United States' dominance and control over the traditional global financial system, as well as the US dollar as the world's reserve currency at large. And since regulators have resisted regulating the space, it seems like they've been holding off on purpose so crypto would just self-implode and maybe go away. Is that happening now? To some degree, yes. Will it be the complete and utter demise of crypto? My random wild guess is no. However, like we've been discussing before, over 95% of all the 20,000 cryptocurrencies in existence out there will experience a complete and utter demise. At the end of the day, crypto will most likely continue to follow the overall risk asset cycle, along with tech stocks and similar on-risk investment vehicles. This means we start recovering from here, or in the next few months, we see another leg down. My guess is due to the recency of the FTX collapse, we still have more dominoes falling on the horizon, which we are currently experiencing with BlockFi filing for bankruptcy this week. In addition, the Fed will keep hiking interest rates until one of the two things we mentioned happens first. One, they reach their target inflation goal of 2%, which will take an extremely long time, or two, something big breaks, forcing the Fed to pump the brakes, which won't take much longer for a few reasons. One, Black Friday was a massive flop. On top of this crazy bullwhip effect the economy has been experiencing since recovery started from the pandemic, which we explored together in a video several months ago. With the bullwhip effect basically due to supply shortages from the pandemic, companies started over-ordering products to make up for shortages and meet consumer demand. This caused distributors to overestimate future orders and caused manufacturers to bring on a huge influx of new workers and ultimately overproduce. Like a whip, a small temporary spike in customer demand is the initial flick of the wrist, and as the momentum travels through the whip, like lag in ordering, estimating, and producing through supply chains, the waves at the very end are big and the consequences are increased costs and excess stock. Following that, once the bullwhip effect has played out, excess supplies with low demand will cause prices to fall, and manufacturers will lay off all the excess workers they hired to meet the temporary spike in demand. Cool. So, with high inflation, wages unable to keep up, overstocking for anticipated holiday spending that didn't really meet expectations, and overall negative market sentiment, in January we will likely see a lot of price drops in products, retailers taking massive losses so they can move product to maintain cash flow, more layoffs so they can cut costs, and as interest rates continue to increase, we will see more corporations unable to pay their debt obligations. And all this may create the perfect storm we need for the Fed to finally pivot around March 25th. Because as corporations continue laying off people to decrease labor costs over the next couple months, come February and March, when the previous month's employment situations reports are released, we may see that higher unemployment rate the Fed has been aiming for. March 10th, 2023 is when February's job report drops. And on top of that, if we see prices decrease next month from consumer demand remaining low because no one can afford anything, causing retailers to slash prices to stay afloat, come February and March, when the previous month's CPI or Consumer Price Index data is released, we may reach some semi-reasonable lows despite the short 2 to 3 month time frame. March 14th, 2023 is when February CPI report drops, a few days after the jobs report, and just a few days before the March 2023 FOMC or Federal Open Market Committee meeting on March 15th and 16th. And this is where Jerome Powell will announce the Fed's decision to either increase rates, keep rates the same, or finally pivot and start decreasing interest rates. Sweet. So those are just some factors the Fed considers when making monetary policy decisions. However, as we've already discussed, the Fed will not pivot until one of the two things happens first: the 2% inflation target is met or something big breaks, and they need to rescue the economy. 2% is just not happening anytime soon. So even if unemployment is stellar, CPI is stellar, but not quite 2%, if a system failure has not occurred between now and then, the pivot won't happen. And my random wild guess of March 25th will not happen either. So the main question we need to be exploring as investors in risk-on assets like cryptocurrencies in this market cycle is, when will a massive collapse occur in the economy? What players or dominoes will be taken out? And when is the closest FOMC meeting where Papa Powell can announce rate drops and fire up the money printer? Because here's the deal. Without growth in money supply, aka money printer go brrr, risk-on assets will not rally. And the money printer ain't going brrr unless or until the Fed needs to execute a rescue mission. So it's possible that nothing big breaks over the next few months, or several months, or few years, or several years. Nothing big breaking in the economy over 2023 is not completely out of the picture. Again, we could be in for a long, brutal winter and continue to slowly bleed out. Or, even worse, a Binance, Tether, or similar could collapse and crypto experiences its own huge system failure that sends our space into a catastrophic nuclear bear winter, while the rest of the financial markets and economy remain relatively stable. In this situation, nobody saves anyone in crypto like the Fed would do to rescue the traditional economy, and crypto's pretty much dead and really boring for the next few years until there is growth in the money supply and the risk asset cycle restarts. Either way, the best thing we can do as investors in the space is to continue to focus on increasing our skills and knowledge to increase our cash flow and income streams, to continue stacking cash or dollar cost averaging into positions throughout the rest of the bear market. And if you've been taking a break from paying attention to the news and market behavior, now is probably a good time to start paying attention again, because we could see some interesting developments over the next few months or several months, or again, this could be a longer, more painful ride than many of us originally thought. So if you are buying the dips and building your crypto bags along the bear market journey, please make sure you are transferring all of your crypto you plan on holding for the long term to cold storage hardware wallets like Ledger. Ledger cold storage hardware wallets start at about $79. So if you are invested in more than $79 worth of crypto, investing $79 to secure it for the long term is an extremely worthwhile investment I highly recommend considering. And just a heads up, next week, Ledger's Open Conference will be happening in Paris, where on December 6th, they will be making a special announcement. Stay tuned for that, as we will be dropping that information on the channel at that time as well. And if you've already got some Ledger devices, you can consider checking out their new accessories coming out, like the Ledger Nano case and the Ledger Nano pod for safely storing and securing the physical wallet device. Because using the Ledger Live app on your mobile device, you can connect the Ledger Nano X devices via Bluetooth, so you can manage your cryptocurrencies and NFTs on the go, as well as buy and sell crypto securely without having to transfer to and from exchanges. So to redeem any specials Ledger is offering at any time, be sure to scroll down and use the link in the description area below to access their correct and official site, all while supporting the channel. Nice. And regardless of whether or not this bear cycle will last a few more months or a few more years, we need to consider other types of investments to diversify into for building a strong, resilient, long-term portfolio to increase our wealth, which is why I've partnered with Masterworks. Masterworks is the first platform for buying and selling shares representing an investment in iconic artworks. We can build a diversified portfolio of iconic works of art, curated by their industry-leading research team, and their recent results have generated an average net return of about 29% to their investors, which is great during this brutal bear market. Masterworks has had to acquire and release more art on the platform to meet demand, which is why there is a waitlist to join. However, we can skip this waitlist by scrolling down and using the link in the description area below. Masterworks' research team uses proprietary data to determine which artist markets have the most momentum. Then, their acquisitions team locates what they believe is a good piece at a fair price and they purchase the work. After that, they securitize the artwork by filing an offering circular with the Securities and Exchange Commission, allowing anyone to invest. And finally, they hold the artwork for about 3 to 10 years until they sell the painting to receive your pro rata proceeds after their fees. Or you have the option to seek to sell your shares on their secondary market, which is currently only available to US citizens with US bank accounts at this time. So if you've got cash on the sidelines, use the link below to skip the waitlist and diversify into art. Awesome. Thank you so much for taking the time to watch this video. If you enjoyed it, please make sure to like the video, subscribe to the channel, and click the bell notification to stay up to date on all the latest videos. So, what do you think of my March 25th prediction? Is the bottom already in, and we are on track for a recovery, or is a cataclysmic bottom farther along the horizon? Let me know in the comments below. Be safe out there.